Of course, every Tuesday we are joined by Basil Chapman. Basil Chapman is the host of the Tiger Technicians Hour on at 10 a.m. Eastern Time right here on TFNN. Additionally, he is the author of the Opening Call newsletter. Again, this is one of my favorite newsletters. I love reading this newsletter. He's always making fantastic moves. One of the things that I think is very positive about this is that he routinely does these 90-minute live webinars, right, for subscribers only. So the most recent one he did was November 14th, and that was a massive sector rotation. I personally think the analysis that he did was fantastic, and it helped me really look at the cycle we actually are now in far better. So I really recommend checking that out. You can do so if it's your first time subscribing. You can do so for 30 days risk-free. If for whatever reason it doesn't work out for you, we will give you your money back, no questions asked, but we are betting that it is going to work out for you. Basil, how are you doing?
I'm doing well, Jacob. Thank you. How are you?
I'm doing well. This is quite an interesting market. I've been having a lot of fun the past few days looking at some of these equities. We've had a massive change up, you know. I've, of course, been looking at Tesla constantly. Nebius, one that we've been looking at, has done fantastic. So I'm curious what you're looking at right now.
So what? This is a potential. I really think it's more like a whack-a-mole because stocks that look very weak at a certain point suddenly, for instance, look, I was anticipating there was some weakness in the Dow. So we got the weakness, but at the same time, there are two patterns that I'm looking at. One is this H pattern where the price comes down sharply and then rolls over at a peak A or B and comes down and retests the left side low. If this pattern doesn't go to the left side low, but in fact starts another little bounce, there's a chance that it could make another arch and looks like a lowercase M-shaped pattern. In this one, it's the reverse. It's upside down in the reverse. It's like a Y, a reverse Y pattern. If the left side high is taken out, you can go quite a bit higher. Now look how fascinating. These are one line and one arch, one line and one cup formation. Look at this. Here's the Dow. It made a high of 45,054 just under 2 weeks ago. On the 4th of December, makes a high of 45,073. So this was just less than 20 points away from that all-time high. Try to rally, and that's about 20 points below the high of 45,054, and there's that arch formation. And I typed this in the other day, and I put news because this whole area here represents news. And I'll show you what happened today, how just a few stocks managed to spike the Dow, and yet there's still some internal weakness short term.
Well, fantastic, Basil. Please stay right there, folks. We'll be right back with Basil Chapman right after this. Welcome back, everybody. This is Jacob Shoup. You're watching The Tom O'Brien Show. I am joined right now by Basil Chapman. Basil is the author of the Opening Call newsletter. He's also the host of the Tiger Technicians Hour, live at 10 a.m. Eastern Time every day. The market is open right here on TFNN. Basil, before we went to the break, we're looking at the INDU, some cup formations. I wonder if you had any more insights for us on that, because I love listening to this kind of stuff.
So basically, I typed in news. So these rectangle formations can last a lot longer than your patience, as the price just trades within a fairly narrow range. But this chart says very clearly that if the Dow closes under, it's at 44,604 right now. If it closes under, I would say 44,200. Well, certainly first 44,000. That's going to mean that this low that was right here on the 3rd of February, 43,879, becomes really critical because it's that H pattern low that's taken out. So in the meantime, excuse me, the Dow is holding quite well. The 9-period moving average is still way over the 14. We have taken some insurance. You know, we went long the day of the low, the 13th of January. We added to our long positions in the Dow, and now we've taken a kind of an insurance policy just for the moment. But look at this cup formation in the weekly chart. So if the Dow at any point starts trading in the 45,300s, this is a cap at the moment. But if it manages to do that, that's going to be very positive. So I said whack-a-mole. So look, IBM yesterday, a Dow component, was looking quite poor just on the very short term, and then suddenly has a spike today. Intel, one of the worst of the semiconductors, one of the worst of the semiconductors, out of the blue, it's trading in the 18s.
Yeah.
Suddenly pops today to 21.88. It's pulling back, of course. But this is not a great chart pattern.
No.
What was the other one? And then Coca-Cola suddenly comes out with earnings. Bam, up 4.5%.
Yep.
So that's what I'm saying. So within the context of the framework of each sector that you're looking at, be prepared that there are just enough stocks that could move that index a little bit higher and also a little bit lower. So I think we're kind of stuck for the moment. If you're looking at gold, we've been along gold for some time. Oh, I've got this throat thing. Hold on a second.
Oh, no problem, Basil. Yeah, the Coke play was very interesting. We were speaking about that a little bit yesterday. They've had some, the past few quarters, you had some kind of declining sale volume, but as we were kind of looking at even just the general market sentiment of people talking about it online and in the culture was huge, and it's great to see Coke take off like that.
That's right. So, and it wasn't doing anything yesterday. So
That's
this
right.
is
I
very
know.
sudden.
Yes.
So we've been long gold for some time, and this has acted extremely well. I suspect that at the 29.68 level, that you're going to be looking at the 29.900. Sorry. Why is this throat just messing me around?
The allergies are bad for me too, Basil.
No, I don't have allergies. This is just part of I had COVID recently, so I'm still getting over it. So 29.90 area should be quite strong resistance. So that makes the millennium, the 3,000 level, something to monitor closely. Okay. I don't have anything technically saying, oh, gold, this is the end. I'm saying that there should be some digestive phase right now. We've been looking, so we took a little bit off our gold position. And if you're looking at this weekly chart, that is still very, very strong. And the monthly chart is still very strong. But this is also part of the vernacular of countries really buying gold for some time now, just because of the uncertainty about the global global economic aspect.
That's right.
So here's another thing that I'm looking at. Bitcoin, which has had a fantastic move, has started the sideways consolidation. So I think that's going to continue for a little while longer. We've been long the Bitcoin, taking some profits, and now we're looking at this kind of digesting the gains. And I think this is what we're looking at throughout the market. Some of the stocks that have done fantastically, for instance, Robinhood, which we've been long since the day after the low in August. We've been taking something off, and it's got earnings tomorrow. Mm-hmm. Yeah, for us, it's gone from the 16s to the 57 area. So we've had some really nice gains. We've still got our core position. But just on a visual basis, it looks somewhat overbought. It doesn't say that it has to crash. It just says, consolidation over a couple of weeks. And I think that could be the case in many of the areas that have done very, even the AIQ, which I talk about often, that we've been long quite some time, the artificial intelligence ETF, getting to a point you can see in the weekly chart, just a little stretched. So I'd be quite prepared. I'd love to see some kind of consolidation, maybe lasting into March. We often have major lows in March and October. So I would like very much to see a consolidation that goes on, kind of a mixed performance with a cap on the upside for most of the indexes. Look at the QQQ. Look at this barrier that they have to get through. Almost there, but this down channel, I call it the inside track repellent zone. The Qs have to get into the 5. They're at 528. This is the NDX 100. It has to really push sharply into the 534, 35 area, and that'll be very good action. So there's a lot to do, but I also think there's also a lot of constructive work. I want to see the regional banks, which we've been long, I want to see them get some kind of boost to the upside. So this is a time where we might be seeing a rotation, and that rotation is going to be very important as we come out at the end of February, going into March. What are the survivors? What are the ones that were the weakest that are actually now showing some strength? Maybe steals in that area. Mm-hmm. I know you always talk about STLD. This is doing very nicely on a short-term basis. But if you look at the weekly chart, there's quite a bit of work to be done, but it's a very nice move off the 110 area to 135.
Yes.
So that's what I'm saying. The laggards might start to find some improvement, and I'm expecting a digestive phase that continues, and that's going to – it would be lovely if the tech sector took a breather and you start to see the cyclicals start to find some strength. And I'm hoping that happens over the next 3-4 weeks.
Absolutely, and I can totally see that as well. Even from some of the earnings we had from very large hyperscalers, growth is starting to slow a little bit. There's going to be a lot of CapEx going on. I think, of course, at least within the AI, you're starting to phase out of these big developers of it. Of course, that'll still be prominent, but we're going to get into data centers. We're going to get into energy. I mean, we just had the vice president today speak in France, and Macron, the president of France, echoed that we are going to use our excess energy. So you have a big cycle rotation. Even what you said a few weeks ago with your stocks that are winners right now are most likely going to be relatively strong, or at least keep an eye out for it. And I've been looking at Nebius, NBIS. And that was one that was very strong during a lot of the volatility in January and has continued, I think, to do quite well. Of course, you had that big sell-off for DeepSeek, but I think that was misplaced fear among a lot of analysts.
Well, that's what the charts certainly say. It was, I call these one-offs. Just this, and that's what I mean by this whack-a-mole. There's this sudden fear or sudden exuberance. But basically, we kind of this is really a rolling. A high-level rolling correction. That's really what I call it, so that there's no real breakdown, but there's no real breakout. And I think that's really important because it says the market is assessing what happened, got a new administration, you have to assess what's coming up. And I think that to me makes a far more, a stronger move as we're coming to the March-April period.
Absolutely. Basil, thank you so much. It's always great having you on. We will see you. Are you on tomorrow?
I'll be out for about 2 weeks, and then I'll be back. So, I'm on tomorrow morning. Yeah, tomorrow morning, and then I'm out of here.
Well, we'll see you tomorrow morning then, Basil. Take care.
Okay. Thank you, Jacob.
Thanks, Basil.